Good morning, good afternoon, good evening, everyone, and welcome to Impact Investing for Everyone, a new framework for positive change. My name is Michelle Eisenberg, and I am a program assistant here at the NASDAQ Entrepreneurial Center. And for those of you who may not know, the NASDAQ Center is a nonprofit building a better path for entrepreneurs worldwide by improving inclusion, access, and knowledge in entrepreneurship. So as you will see in the chat in a moment, the NASDAQ Center provides programs, resources, and exceptional mentorship to entrepreneurs across all races, industries, and geographies. So definitely make sure to check out those links and resources in the chat. And then just a couple of housekeeping items before we get started. First, let us know where you are dialing in from in the chat. We always love to connect. And second, we are going to open up for live Q&A at the end of the event. So please make sure to submit your questions for us in that Q&A function at the bottom of your screen throughout the presentation, and we will try our best to get to as many as possible. Now, none of what we do could be possible at the center without all of the amazing support from our sponsors, including NASDAQ, Lehigh University, KPMG, Wilson Sonsini, Wells Fargo, the Nareet Foundation, Walmart.org, JP Morgan Chase, BPM, HubSpot for Startups, and Google Cloud. We are humbled by their contributions and hope you are grateful too. And so before we get started, we always like to launch a couple polls to step back and see how everyone here in the room is doing today. This first one is going to ask, how are you feeling? How are you feeling about your business? Fearful, anxious, surviving, or optimistic? And we'll give it just a few moments for folks to respond here. Thank you, thank you. All right, I'll give it just another moment. Wonderful. All right, I'm going to end this poll and share these results. All right, wonderful. Looks like optimism coming up in the lead, but definitely have some feelings of fear, anxiety, and surviving. Totally understandable. And hopefully this lets you know that you are not alone in whatever you are feeling. And hopefully our conversation today will help alleviate some of those feelings. So I am going to stop sharing this poll and launch that second poll. What is keeping you up at night? Finance, sales, marketing, scale, pivot, team, or surviving? And we'll give it just a few moments for folks to respond here as well. Thank you, thank you. All right, looks like we got folks from San Francisco, Georgia, more San Francisco and Georgia. Wonderful, awesome. San Diego, welcome, welcome. Singapore, awesome. From Mississippi, amazing, wonderful. Nigeria, incredible, awesome. So great to have people dialing in from all over. All right, I'll give this poll one more moment. Awesome. All right, I'm going to end this poll and share these results. All right, looks like finance coming up in the lead. Very fitting for our conversation today, but definitely have some feelings of surviving. Sales, scale, and team. Wonderful. Thank you all so much for participating. I'm going to stop sharing this poll, and without any further delay, please join me in giving the warmest welcome to our special guest, Marcia Dawood, author of Do Good While Doing Well. Marcia, such a pleasure to have you on here with us today. Super excited for this conversation.
Thank you so much for having me. I see some familiar names in the chat, so that's
Oh,
always
amazing.
fun.
Love it.
Mhm.
Always great. All right. Well, before we dive right in, maybe you could just give us, 30 seconds of who are you and kind of what brought you to write about, what you wrote about in this book.
Yeah, yeah. So I became an angel investor in 2012 kind of by accident because I was invited to a meeting and I had no idea what angel investing was. And from there, I was asked to join the board of the Angel Capital Association. And then later on, I became the chair. That led me to now being on the advisory committee for the Securities and Exchange Commission Small Business Capital Formation. So I've seen a lot over the years. I've done all the things. I've been an angel group leader. I've been manager of funds. I've been an entrepreneur. Jumped into one of my startup companies and helped as the COO. So I've done a lot of different things, and I felt like, wow, I feel like I learned a lot over that time. Some of the time I learned because I made a lot of mistakes, and maybe I could help other people know that they could that they can participate in this asset class. But I watch so many founders just struggle and struggle and struggle to fundraise, especially women and people of color. And I just thought, there has to be a better way. This is just crazy. There's so many people out there that could be funders. They just have no idea that they can be. And that's what led me to write the book.
Really interesting. Wonderful. So yeah, I mean, one of the core or foundational elements of this book is the notion that charity, it isn't the only way to make impactful change. And so could you talk a little bit more about why you believe angel investing can be just as, if not more, transformative for those looking to make a difference, especially with kind of that perspective of, building wealth?
Yes. So if you look at the amount of charitable donations that are happening in the US each year, it's about $475 billion, which is a lot of money. It's great. And I absolutely believe that people should donate to charities. However, that $475 billion is only equivalent to about 1% of the value of the US stock market. So if you are thinking that nonprofit companies through charitable donations are actually going to change the world and make all of these incredible innovations that we're really looking for, like curing diseases and finding treatments for things and the climate, poverty, you name it. That's a lot of burden to place on these nonprofit organizations. And there are a lot of for profit companies out there that are working on incredible things that a lot of people don't even know about. They're happening all over the country, in every city, in every town. And people, everyday people, can be a part of it, of helping them to succeed, helping them either with maybe their time, their expertise, or their dollars in a little bit of a way, or a small, or in a much bigger way. So, but every time I would talk to people, no matter what their income or wealth level was, no matter what they did know or didn't know about startups, they would say, well, that's not for me. And I would say, well, why do you say that? And they would say, well, I thought that was just for rich people and people who were living in Silicon Valley or who were well connected, who were invited. And maybe back like 20, 30 years ago, that was true, but that's not true anymore. But that myth is still out there. And I think that's one of the key things that is holding back a lot of our incredible entrepreneurs from being able to move forward, because they're out there, pounding the pavement. They're banging their head against the wall, trying to find, who can I go to for funding? And there are a lot more people that could be funders, but how do we get them past these ideas that are really just not true anymore? Well, we have to keep talking about it. We have to bring awareness to the problem so that people will think, you know what? Maybe this could be for me. Maybe I could do this. And once that mentality starts to change, then I think we're going to see a whole lot more doors open.
Yeah, that's so interesting. This idea of kind of while the standards have changed, people's beliefs kind of stay longer than that change. And so it's a matter of, shifting your mindset and for individuals who are new to angel investing, especially, potential funders, the prospect of investing in startups can seem a bit daunting. And so continuing to explore this idea, what other key mindset shifts are really essential for embracing this opportunity, especially for those who have less experience that investing?
Yeah, well, you just brought up the perfect word, daunting. So I've seen so many people, they might get excited and be like, okay, wait a minute. Okay, I can do this. I don't have to be super rich. I don't have to be invited to like every single deal. I could find things that are happening in my local area. I could get involved with local entrepreneurs. But then they get a little bit involved and they start to think, oh my gosh, I need to know everything before I can make a decision. And especially as women, we're definitely like that. We want to know everything before we make that decision. It's kind of like that saying about a resume. Like if it's, if there's 10 qualifications and a guy has like two qualifications, so he's like, oh yeah, I'm definitely getting this job. And then as women, we have 9 out of the 10 and we're like, "Ugh, we didn't have the one. Right. So our mentality just needs to change about how daunting it actually is because it's really not. In a lot of cases, there are angel groups, there are funds. Very, very, very rarely do you see an individual person invest directly into a company. And I say that because you have to be very, very wealthy in order to do that. And that isn't really a good idea for anybody. I definitely would never want to do that, no matter how much money I ever had. If I won the lottery or something like that, I would still want to invest with a group because I would really want the expertise and all of the knowledge and the help of that group in order to bring that to the company. So I really think that this is a way we can kind of pool everything together and get people to think, okay, this doesn't really have to be so daunting. I can work within a group. And the other really cool benefit to that is you get to know people you would never get to know in other circumstances. You get to work on something together. You have a focus of thinking, oh, I'm going to help this company to be able to grow and evolve. Well, that isn't something that you do, like every day. So this is really an interesting way to meet people that are totally outside of your normal network. And I just found that over time it became less and less what looked to be daunting because I was like surrounded by people that together we could make better decisions.
Yeah, that's so interesting. And I know, especially for first-time founders, building a robust network is so important. And often the key that's missing is kind of like those funder connections. And it can seem like a mystery sometimes of like, how do I unlock these opportunities with potential funders? So, I love this idea of kind of like you build confidence as you build your network and you learn from all of those around you. It's a continuous learning process. So that's really wonderful insight. And, in your book, something you talk about, you encourage readers to kind of assess what their current involvement is in creating change and especially, as pertains to their relationship with money. And so can you talk more about why this reflection is important for individuals who want to become effective angel investors?
Yeah, so we talked about it a little bit when it came to charity. So sometimes, I mean, I know I'll just use myself as an example. I thought the way that I was going to give back or help make change or affect change in the world was to either donate money or time, to nonprofits. And I still do that. I think it's incredible. However, like I said about the disparities that are going on here and how many for-profit companies are out there, I think it's just something that people could really take a look at and say to themselves, well, no, wait a minute. I could actually take a small portion of my portfolio of investable assets. And not only could I potentially make change and help these underrepresented founders to be able to bring innovation to the world, but I could potentially get a financial return too. So sometimes I think that word investing and donating, they're so far apart. And yet when we think of the word investing, we're thinking, oh dear, if I make an investment and I don't do that well with it, then I'm going to look like I'm a good investor or I look like I made a bad decision. But when we donate to charity, nobody thinks to themselves, "Oh, I made a bad donation." No.
Yeah,
Right?
that's so
So
interesting.
you almost have to think about it like, okay, what is your relationship then to money? If you give it away, you're not expecting to get a return really of any kind. Maybe you feel okay, you feel pretty good, that you're helping this charity, you're helping a cause, you love that. But you're probably not going to get any type of a financial return for that. And so with investing in this particular type of asset class, you can decide because there are so many companies out there working on so many amazing innovations, you can start to decide, well, these are the things that I care about. And these are the places that I would like to put my money and my time. And that could actually help a lot of these founders to be able to grow faster, but also to take the expertise of those people that are also trying to help them with the funding.
Yeah, yeah, really, really interesting. And kind of to dive a little bit deeper into, specific changes that have gone on recently, there's definitely this emphasis on you know, building a funding strategy that aligns with your values and the change that you want to see in the world. And for those who don't have experience necessarily, um, in your book you mentioned that investing is now accessible to more people than before, even those who aren't wealthy, thanks to regulatory changes. And so can you talk more about these changes and how they've impacted who can participate in angel investing and, just what opportunities this opens up for first-time investors?
Sure. And I think this is something that really helps founders too. Um, I think a lot of people know what crowdfunding is because we've heard of GoFundMe if people are trying to raise money for a cause, or maybe Kickstarter or Indiegogo if they were trying to do a rewards-based crowdfunding. Well, in 2016, the Securities and Exchange Commission made some changes, and now you can invest and get equity in a company through crowdfunding, equity crowdfunding, it's called. And there's several platforms that basically facilitate this. And the big three are WeFunder, Republic, and Start Engine. And so, in a lot of cases, especially if you have a consumer product or something that would be very close to the consumer, I think people, founders, can get their customers to become investors, and then they can, in turn, have their investors become customers. So, it's a great way to not only test the marketplace to see like is my product really good, are people going to buy it, but also getting people to really feel like they're invested because they are directly invested in your company. So to me this is a really great thing for a number of reasons. One, it lets people, especially women and people of color who maybe don't have access to that early friends and family capital that you hear about. Oh, I'm just going to go raise a friends and family round, like from, this
Yeah.
yada padada people and everything. And then some people are like, I don't have friends and family that can give me $50,000. Right. So where do they go? So this can be a great starting point, but I love it too, just from that market validation. Like, what are we actually going to do that's going to help them? So I believe that it is a great thing for founders, but I really believe too that is a great starting point for people because back in the day, and this was even back when I started, you really had to write checks that were pretty large. Like I'm talking ten or $20,000 in order to get started. But now, pretty much anybody who wants to, who has a bank account or a credit card and internet access, can invest in a company. Um, and I love that because now you could get started. The minimum, according to the SEC guidelines, is $50. I usually don't see them that small, but $100, $200 is usually the average. And then I've had a couple people on my podcast. I have a podcast called The Angel Next Door, basically trying to demystify everything about angel investing. I've had a couple of the CEOs of these big equity crowdfunding platforms come on my podcast, and they say that the average check size is really closer to about $1,000. So if
Mm.
people are going to do a equity crowdfunding campaign, typically that is around the average amount that people will invest per investor. And I just think it's such a great way to get started. You don't have to break the bank and, put up, all kinds of money in order to start to learn and get started. And the other thing too is everything is so transparent on these websites. You don't have to invest any money. You could literally make, and I have a workbook that goes along with the book. And in the workbook, I have people make a mock portfolio with like play
Mhm.
money, kind of like you do in Monopoly. And you could just make a portfolio by going onto these sites and just looking around and seeing what's there. That's the one mistake I think a lot of angels make is that they get a little too ahead of themselves. When you start to meet entrepreneurs, you fall in love. I mean, they are so innovative. They're
Yeah.
amazing people. They do so many incredible things. And you start to think to yourself, oh my gosh, I have to help this person. And so I'm definitely investing. But not always is that you don't always want to just rush in. You got to like take your time, look around, learn a little bit before. And I think that's when it stops becoming daunting and it starts becoming accessible because you've kind of seen what's out there and you have seen a couple of different companies. And on these platforms, these equity crowdfunding platforms, they actually let you see all the information. There's usually a very nice video that explains everything pretty well. And then there's a whole bunch of documentation. But my favorite part about these platforms is there's a Q&A section. And this section is very transparent because the people who are running the campaign or the CEO of the company, they are not allowed to answer questions off the platform. So if I wanted to ask a question and I kind of maybe I knew the CEO and so I just sent them an email, that's not allowed. That CEO would have to then take my question and put it out on the platform and answer the question in the platform so that everybody sees the exact same information. That's one of the things that the SEC is very big about is they want everybody to have the same amount of information before they make an investment decision, which is a great idea. And that's what I like so much about it. And you can find nuggets of gold in these comment sections because you'll just have people asking questions and you'll think to yourself, oh, I didn't think about that. And then the CEO or whoever's answering the questions will answer the question and you're like, oh, okay. And then you can start to formulate your own kind of diligence around it, thinking to yourself, okay, did this check all these boxes for me that I would really want to invest in this company? And does it fit into my personal investment thesis or what I care about investing in? And then people can make a decision about whether or not they want to do it.
Yeah, this is really interesting. And I love you brought up the point of, entrepreneurship and innovation can be so exciting, especially for, new investors and to really understand the process, the intricacies that go on in determining whether an investment is the right decision or not, is so critical to the process. And so, potential new angels are kind of trying to understand, things like screening deals or reviewing pitch decks. What are some of the most common mistakes you see, new angel investors making and how can they avoid them?
Yeah, probably like I said before about like just get falling in love too fast and then going ahead and making an investment and then I know I did that and what ended up happening was my bucket of money because we usually at the Angel Capital Association anyway we say you shouldn't be using more than 5 to 10% of your investable assets. So it's almost like you think about, okay, here's all the money I could potentially invest in whatever it's going to be, mutual funds, stocks, whatever, my retirement, my kids' college, all these things. Okay. So you have that money. And then there's this tiny bucket that you're going to carve out so that you can invest in startups or early stage companies or anything that would be considered alternative. That could also be art or things like that as well. But the thing about angel investments is they are illiquid, meaning that you can't just cash them out like you can with a public stock. So if I went on to an E-Trade or a Robinhood and I bought a stock, let's say a share of Apple stock, I could turn around and I could sell that stock in like literally 30 seconds later, right? But you can't do that in this type of an asset class. You make an investment and then you have to wait until that company either gets acquired or something happens so that there's some what we call liquidity event or an exit. And until that happens, you're not going to see any money. So you have to be very careful that you're not using money to invest in illiquid things like angel investing unless you have time. You have the time to wait for it. So back to that, you'll take a little bit and you have this little bucket of money. And so I've seen that sometimes people they rush in a little bit too fast to get those, first investments in. And I really think if people just waited and nowadays that you can build a more diversified portfolio, meaning that you can have multiple companies that you've invested in because the barrier to entry has gotten so much lower. You could be doing that through equity crowdfunding for maybe just a couple $100s, but there are also funds out there that can help people to get a more diversified portfolio. And back in the day, you probably had to have 250,000, maybe even $1 million in order to invest in a venture fund. But
Mm.
angel groups and all kinds of other venture partners have started to put together funds, and from there, a lot of the barriers to entry are maybe a couple $1,000s, $10,000, $25,000. These are much easier to swallow than a $250,000 check. So,
Yeah, yeah, a lot of great insight in there. And I want to, keep diving into, how entrepreneurs can really hone in and align their investments with their personal values to create this impact. And so you in your book you talk about this concept of a halo strategy. Um, and I guess I'm wondering how can individuals, identify and articulate their why and use it as a foundation for creating a personal Halo strategy. And maybe if you could just describe what the Halo strategy is and how it kind of relates to this decision-making process.
yeah. So it's basically the Halo strategy is an investment thesis. It's like what are you going to invest in and with how much money and what are your values essentially. So I know, like I've said, I made some decisions that were probably a little hasty at the beginning. And I wish I had had somebody like sit me down and be like, oh, hey, maybe you should think about this, think about what it is that you care about, and think about how you're going to take this bucket of money and be able to invest it. So I basically put it into a couple different buckets. And on my website, you can go there, marciadawood.com. You can actually find and download a copy of the Halo Strategy Worksheet for free. Um, but the first part is, what are the things that you care about? And I have people go through an exercise where they really start to think about, well, is it a healthcare? I know for me personally, I'm a huge fan of anything that would help further people not being sick, more of a wellness plan as opposed to going after people who are sick. Let's be on more of a wellness plan. So I love that type of stuff. Maybe it's the climate, maybe it's poverty, maybe it's helping women and girls, whatever it is. You put that and you could have a whole lot of things. It doesn't have to be limited. Or maybe you're just super passionate about one thing because something happened in your life and now you're on a track to make sure that that particular thing is either cured or helped or whatever it is. And then thinking about, well, how much how much of how much of what I want to contribute do I have to do? How much money, how much time, how much resources, how much expertise? And you start to make a list of things like what am I good at? What are some of my skills? And I've had people who are very accomplished people say, well, I don't have any skills to offer a startup. And I'd be like, oh my gosh, that's so crazy. Like, you don't have to be a lawyer or have like intellectual property experience or anything crazy like that. Literally anybody can help a startup because they need all kinds of help. They need help with bookkeeping, human resources. They need help with social media. They need help with marketing. I mean, you name it, they need help with it. And if nothing else, you as a customer could be helping them, and you could also help them like just by liking their social media posts or whatever you do. I mean, there are so many ways that entrepreneurs need help and could use help. So you have to then start to think to yourself, okay, what is it that I'm going to help with? Am I going to help with time, money, all that kind of stuff? And then you start to think about, okay, well, how much? How much time, how much money, and then really start to put that into a plan. And the plan could be many different things. We've already talked a lot about equity crowdfunding, but I usually encourage people to just find out what is going on in your local community.
Mm.
There are entrepreneurs in every city, every town, and in a lot of cases, you can just go to an event and you can start to meet people and just learn about what's going on. And sometimes people think, oh, I live in, fill in some town in the middle of the US. And I'll be like, no, there's stuff going on there too. I guarantee it. It's everywhere. But a lot of people have no idea. Like when I was first asked to go to an angel investing meeting, I was like, have I been living under a rock? I live right here. And these people are right here with me. Like seeing them. And I had no idea what was really going on right in my own backyard. So I always encourage people to take a look at that too. And that's kind of how the whole Halo strategy comes together.
Love it. Really interesting and definitely a framework that entrepreneurs can kind of begin to think about to at least guide them in the right direction if this is kind of totally new. And we've talked a little bit about this, but the importance of diversifying your investments is a key part of the Halo strategy. And so for those just starting out, what are just some best practices or key ways to diversify those impact investments to maximize both impact and potential returns?
Yeah, I would definitely say I love funds. I've talked about that a little bit, but a fund is basically where there's a manager who pools money together and invests in multiple companies. And I love that for so many reasons because you can actually align your Halo strategy, your values with the thesis or the basically the investment strategy of that fund. So there are many, many, many impact related funds out there. And so if you aligned with a fund like that, you would put in your amount of money, however much that is, and it would get pooled with other people's money. And then you're able to diversify your portfolio. And maybe with the writing of one check, you could actually now have exposure to 10, 15, even 20 different companies. And people are like, oh my gosh, I didn't really have to do a lot. The manager or managers of the fund usually take care of a lot of the diligence and the picking of the companies. And in a lot of cases, people can get as involved as they want to, or maybe they don't have any time and they don't want to get involved at all. That's fine too. But the whole idea is that you've now made a contribution at whatever level you want to, but you do have that diversified portfolio. Because I tell a story in the book about there were two people that were members of the angel group that I first started with, and two of them, and they both made investments in like three companies, but they were three different companies. And the
Mm.
one guy, he had he had great returns off the three companies, and he just thought angel investment was the greatest thing ever. And then the other guy, he lost most of his money, and so he thought this was awful. He's like, and you know what? Neither of them are a good representation of angel investing because you really don't see like huge wins in the first year or two, and you really don't see huge losses necessarily in the first year or two either. Sometimes you do, but because it is a risky asset class.
Yeah.
But at the same time, just picking two or three companies and thinking, hey, yeah, I'm smart, so I'm going to go ahead and I'm just going to pick the two companies that I know are going to win. And that isn't good either because like you just really don't know what companies are going to succeed. You don't know what's going to happen. Is there going to be a pandemic in the mix? All kinds of things happen that can really hurt entrepreneurs or help them along the way. So it's very, very hard to just say, oh yeah, I'm going to pick these and become like the greatest investor ever. So I get nervous when people are only investing in like one, two, or three companies and then waiting because that's not a diversified portfolio. Diversification really comes when you have at least 10. And I would rather see 15 or 20, maybe even 30 companies in your portfolio. And that can happen over time. But I think that that's when you're going to start to see not only a lot more financial returns or ability to potentially get financial returns, but also you will be able to see the impact that's being made because all of these different companies are working in, a slightly different area.
Yeah. Oh, yeah, really, really interesting. And I think as potential funders are kind of becoming more familiar with the process of, evaluating startups. So something you mention in your book, and maybe it's part of the Halo strategy, is this tool, the Halo Navigator. And so how can this tool, first of all, if you could elaborate on what that tool is and how it can help potential investors really make the most informed decisions about their investments, kind of building on this conversation.
Yeah. So what I found myself doing over the years was I had this little piece of paper that had like these 10 questions on it. And it was kind of like, what's the problem that the company's trying to solve? What's the solution that they're coming with? Who's the team? What's the addressable market? There's like basically a bunch of things. And I kept gravitating literally just from a natural standpoint, anytime I would look at a company, I'd be looking for this little piece of paper to the point where I had to then, obviously have it digitally too. But, I had it like in my office and I would just look at it anytime I was looking at a company. And I'd think to myself, okay, did I think about all of these things when I looked at whether or not I thought this was a company that could be investable? And I thought, you know what? That is what people really should be thinking about, because if you think about these 10 things, that's going to give you a pretty, and the answers to the 10 questions, competition, how are they going to exit? These are basically all the things. Then they're going to have a better kind of picture of the company. Now, I will say these are all early. They're all risky. We know this. So there's always going to be a reason for you to find a no. Something about this is like either the team isn't quite built out yet or whatever. Okay, there's always going to be a reason. You're looking to see what is your yes. And so this Halo Navigator to me that's those 10 questions. Those questions that I was thinking to myself all the time. Okay, let me make sure that I have a clear picture of the company, and by answering these 10 questions, if I know those answers, I know that I can have a pretty good idea about what the company's doing.
Yeah, love that. I think that's a really great framework, and definitely something entrepreneurs can kind of apply across the board. So definitely check that out. I know Anna just put a link in the chat. You can check out those resources, and try it out. See how it kind of, impacts your process. So wonderful. And, I know we've touched on this quite a bit throughout the conversation. And you've done a wonderful job of kind of, exploring the benefits of, these kinds of micro investments. But still, many aspiring investors might worry that their contributions aren't or won't be significant enough. And so, just any thoughts on how they can change that mindset and recognize the value, both monetary and otherwise, uh, that they bring to entrepreneurs and startups.
Yeah. So I think about it like this. Like, okay, so let's just say I said, you know what, I'm not gonna invest. And then next person says, I'm not gonna invest. Next person, I'm not gonna invest. And then you end up with like a kind of a snowball effect. But like, let's turn that around for a minute. And what if I said, okay, well, I'll invest. And I saw somebody in the chat just put that they have a We Funder campaign. So let's say that I said, oh, well, I'll invest in your We Funder campaign. And let's say, Michelle, you said you would, and Anna would, and then another person did, and another person did, and then maybe another person they didn't. That's okay. And but then another person did. So now you've got the snowball effect of good. So even if my contribution was small and maybe Michelle, your contribution was bigger, it doesn't matter. This is all about getting people in the game and getting the momentum going for entrepreneurs, because almost every entrepreneur I've talked to, especially underrepresented founders, they will tell me the first, and you could just fill in the blank about the number, first 100,000, the first million they raised, whatever it was the absolute hardest money to get, because they are, it's early, they're new, they still have their product that they're, or whatever they're trying to do, like getting off the ground. So how do we make it so that those little contributions they're not so little, they really can be very helpful? And I've heard over and over again from founders also that there was one person that really helped them with their, because of their expertise, they took the time, they coached them. That person, that one person, even if they just gave a little bit of their time, was so instrumental to helping the company that they are just eternally grateful. So it doesn't take like a ginormous village. It literally just takes a village of people who are these one-off things that are going to just keep multiplying and keep multiplying. And that is how we're going to change this to make it easier for founders to fundraise.
Hmm. Love this idea. And I know this is so, will likely resonates a lot with those in the audience, especially those early founders that are really trying to establish credibility. And you said it, that first raise can be very difficult to achieve. And so, it's these little ways of, establishing credibility, and entrepreneurs can kind of, use that momentum, as you were talking about, to continue finding growth and success, identifying new opportunities. And you mentioned that, of course, time is also a totally valuable investment. And so as first-time investors or potential investors are kind of looking for opportunities to contribute, they can know that, time is also something that's so valuable to startup founders. So wonderful. And, you know, I know we have time for a couple more questions and then we'll go into live Q&A. Your book discusses the disparity in funding for women entrepreneurs in particular. And so, what are some practical ways that angel investors can help bridge this gap? And if you could just talk about the role that they play in general in driving gender equity in startup funding.
Yeah. So the numbers are pretty abysmal. For women in venture capital, the number's less than 3% of funding. Now, in Angel World, we do see that a little bit better. Probably somewhere between 25 and maybe even up to 35% of funding is going to women at the angel level. But remember, angel level is very small compared to the venture capital world, which is lots and lots and hundreds of billion, millions of, or if not billions of dollars. And then you've got so um there's that, and then you've got people of color where they get like less than 1%. And we started to see that get a little bit better at the angel level, especially in 2020, but unfortunately then we saw that start to slide off too. So in some years we'll see women and people of color getting more funding at the angel level, but then in other years it isn't quite as good. And over time it has started to slowly get better, but the venture capital numbers just haven't moved at all, which is just, it's kind of ridiculous. So how do we change it? We really need more people who look like the founders writing the checks and making the investment decisions. We need more women. We need more people of color. We need more people who are in the disabled community. Serving on the Securities and Exchange Commission Small Business Capital Formation Committee has just been so amazing because of the people that are on the committee and how representative they are of just about every group of people out there trying to fundraise. And I just love talking to all of them and making sure that as a group, we are not excluding anybody, that everybody is getting their voice heard so that we can get more access to capital for their businesses. And in some cases, that's startup businesses that are scalable. And I guess that's the one thing I always like to try to clarify is that when we talk about a startup, that's a small business that basically has the ability to scale, like really become, have a lot of customers, really grow at a rapid rate so that it would be attractive for another company to potentially acquire them.
Yeah.
But there are lots and lots and lots and lots of small businesses in the US that are not necessarily startups. They're not necessarily scalable, and that's totally fine too. And there is capital available to them. And what I think the one of the biggest problems is that capital is, it's just not very clear about where to go or how to get it or any of that stuff. So the SEC has worked very, very hard to put resources on their website. And I know that the center has just been incredible about trying to help get founders the information that they need, because there are debt programs, there's all kinds of like SBA things, lots of grants. I mean, there are a lot of resources out there, but talk about daunting. I mean, that is, just to look at all of that stuff is like, oh my goodness, if I were a founder, I would like just want to cry, like just, oh my gosh, how do I know where to go or how to do this? So there's a lot of demystifying that I think needs to go on there too. And I think if we can get more people involved, we get more people as funders, we get more people talking about it, it becomes a lot easier for those founders to decide where are they going to take funding from, because in some cases I see them trying to take funding if they can get, and maybe they can get it from angel investors, but maybe that's too soon for them, and they end up giving away too much of their company, and they end up not retaining as much equity as they would have liked. So I think there's a delicate balance, and that's why I love the work that the NASDAQ Entrepreneurial Center is doing so much, because I think that's one of the big things that you're focused on, is helping to make sure that these founders are setting their companies up right from the beginning and not getting into those situations. Because I've talked to way too many founders who were just, they got they'd get to a certain point and then they'd be looking to even raise more money or grow their company to a bigger level. And then they're like, oh my gosh, I had no idea that I just gave away all this equity. And now, in order to move forward, I'm going to have to give away even more. And at the end of the day, they might be left with just not as much as they really thought they were going to be.
Yeah. Yeah, really important conversation there, and definitely something entrepreneurs need to be aware of as they're, considering, entering this kind of, investment strategy. Marcia, this has been such a wonderful conversation, and I think we have time for one more question before we launch into live Q&A. And so, given that, uncertainties, whether it's, market, uncertainties or natural disasters, inventory fire, whatever it may be, if when founders or potential funders are looking to kind of stay resilient during potential setbacks, um, what's important to keep in mind to really maintain that long-term perspective on their investments despite potential setbacks?
Yeah, that's tough. And I will tell you, the people who are out there right now who are fundraising and who have been fundraising since 2022, my heart goes out to you because it has been the most challenging fundraising environment that I know I've seen in a very long time. And in 2020 and 2021, even though 2020 was the beginning of the pandemic, there was a lot of capital flowing. And we saw it was like relatively, I wouldn't say easy, but it was easier for founders to fundraise. But then all of a sudden, I think the pandemic, a lot of things, the economy, it all started to catch up. The interest rates went up. So think about it. If an investor can take their money and put it into a money market account and get like 4.5%, 5% in something that is the lowest of low risk, why would they take money and put it into an illiquid asset like venture capital or angel investing? And so I think that a lot of times people weren't putting all of the pieces together about how much this was hurting the smaller companies the small businesses because our government they're just trying to basically get the economy back in line, and that did require that they raise interest rates. But that also over time, we're just going to see a cyclical thing. Now I do think it's going to get better, but the last couple of years has just been really, really tough. And so I think that's taught a lot of entrepreneurs that they just have to be super scrappy, super resilient, and they have to keep asking themselves the question, what if I can't get the funding? If I can't get the funding, am I just going to shut down, or what else can I do? What else can I do? And I think that's if you can keep asking yourself that question, you keep putting yourself in that situation, then the resilience will be there.
Wonderful. Amazing. Marcia, this has been an incredible conversation. If you are in the audience and you have a question, please make sure to drop it in that Q&A function at the bottom of your screen. We'll try to get to as many as possible.
I see
Now,
there's a bunch in the Q&A here
yeah. So
unanswered.
when we're just, I guess let's start here. I guess I'm assuming this is coming from like the founder perspective, wondering what's absolutely necessary to receive funding from angel investors. But yeah, I guess, what are your kind of thoughts on kind of the decision-making process from for angel investors that's critical for entrepreneurs to understand?
Yeah, I mean, that question is always going to be of a little bit of an it depends, but I would say that what I see as the most challenging problem that entrepreneurs have between actually what they're working on and getting the funding is that they cannot explain the problem that they're solving in a good enough way for angels to feel like it is so sticky that people are actually going to buy it.
Mm.
And I've asked founders before to explain to me, well, what's the problem that you're solving? And they will go right into what their solution is. But the solution of whatever they're making, whatever product, service, whatever they've got going on could be great. But if it's already being solved in a different way, if that problem is already being solved in a different way and it isn't so bad that people will change their behavior, then it is not an investable company. And I
Mm.
think that is what I always challenge people to go back and think about. Really, really think about the problem that you're solving before you start talking all about your magical solution.
Love it. Amazing. Goes back to that why and why it's so critical. And you mentioned something just now at the end, how, the difference between startups and small businesses and that, great to invest, even in small businesses that may not be looking to scale. This person is wondering, if a company isn't looking to scale or exit, how do you get a return on your investment?
Well, that's a good question. And in a lot of cases, if companies, that's another thing that angels look at. Is it a company that is will end up turning into a lifestyle business, we call it, where people are happy just doing what they're doing. They're getting a paycheck and they're not necessarily going to grow the business to a scalable level. That could be a problem. So a lot of it is just, how much of the company is actually going to grow. And if in fact people are not, the founders are not willing to sell the company, or they don't have on a path, they're not on a path to exit, then, possibly selling shares on a secondary market. But that's very, very fragmented right now. I'm hoping someday that's like my dream, that there'd be a really cool secondary market where you could sell shares, but we're a long way from that.
One can dream though. I love
You can
it.
dream. Yeah.
Amazing. Here's another question. We haven't really touched on this at all. But as founders or potential funders are exploring their opportunities that are out there to get involved, what are your thoughts about incubators and accelerators as a means for investing and creating change?
So I think they're fantastic, especially for founders who are just getting off the ground. Um, I haven't, I haven't personally invested in an accelerator myself. Um, so if you're asking about like actually as an investor investing in an accelerator, um, that's another good way to get diversification. It is accelerators are taking companies at the very, very, very earliest of stages. In some cases, they don't even have a fully baked out idea yet. They're really like it's just the back of a napkin.
Mm.
So as an investor, I would just want to I would want to know the track record of the accelerator itself before I would take a look at the companies that would be in that accelerator. I would really want to look at, what are the companies that they worked with before, and how did they help them, and how well did they do? But I'm a huge fan because of accelerators and incubators. They're very similar, but incubators usually, you go and you actually work there, and there's place that you actually get some kind of a, we call it real estate, but basically you have a place, office or some place to go. But accelerators can be anywhere, and they're basically more of like a mentoring type program, and they help entrepreneurs to be able to accelerate their business through classes, mentorship, things like that.
Wonderful. Yeah, really, really great insight and definitely just another, other opportunities to consider there and really important in terms of diversifying if that's part of your goal there. So wonderful. And then I think we have time for maybe one more question. And I think this is so interesting because you kind of redefined, what it means to be an angel investor. And I think there might be a lot of people in the audience today that are like, I walked in here and I didn't consider myself someone who would potentially be an investor, but now my mindset has shifted. And so, for those who want to keep kind of spreading that type of mindset and maybe they know someone who would, be good as an investor, but maybe hasn't considered themselves, as part of that role. What have you found most helpful in sparking that conversation, for people who don't maybe consider themselves to be investors?
Yeah, I think it comes down to it is a mindset. So, but the thing that really starts to change people's mind is when they meet entrepreneurs. I know
Mm.
that's what changed my mind. So I always like to showcase, no matter what I'm doing or if I'm speaking at various places. I just did an event here in Charlotte a couple nights ago, and we had four local entrepreneurs come, and they only spoke for a few minutes each, but they told people about what was happening in the local community, and people were amazed. They had no idea, and these were all local people coming and hearing from local entrepreneurs. And I just think that is what starts to get people to realize, wow, there is a lot going on that I had no idea about. We all kind of live in our own little bubble, and like sometimes getting out of that bubble can really help.
Yeah, amazing. Well, Marcia, this has been such an incredible conversation. I know we're going to launch one more poll as we're finishing up here, but if you had just one key takeaway or piece of wisdom that you wanted to leave with the audience, what would that be?
I think it's just that we have an awareness problem. We have a lot of people out there that can help fund these founders, but we are not talking about it enough. We don't talk about money enough. We don't talk about investing enough. And we certainly don't talk about investing in early stage companies. So the more we can talk about it, the more conversations are happening, the better all of this is going to be. And more innovation is actually going to be seen in the world. So if you want to be the change you want to see in the world, you can invest in the change you want to see in the world.
Love it. Marcia, thank you so much for an incredible conversation and just
Thank
taking the
you.
time to share this insight and perspective with folks in the community who may not be familiar and now kind of, might have some confidence for getting involved and creating that change they'd like to see. So on behalf of the NASDAQ Center and everyone here today, we are just so thankful that you joined us.
Oh, thanks so much for having me.
Wonderful. And to our audience, we'd love for you to join us again for upcoming webinars, which you can view using that link that's going to be posted in the chat. Thank you all so much for joining us today. We look forward to welcoming you back online with us soon.